Most retail traders think that support and resistance is what moves the market. Institutions don't. Institutions leave behind footprints called order blocks. Once you can spot these order blocks, you can see exactly where smart money is entering in on the trades. This is the ICT series with Dom to Bomb Trades, episode 5. Alright guys, welcome to the charts. We're going to talk about order blocks. So far, some key things we talked about in the ICT series is liquidity and fair value gaps. Now when you add order blocks to this, you have 3 confluences to a winning trade. And this is very important. The word confluence is used a lot in the trading community. You'll hear people talk all the time like, you can't just use one concept. I can't just use fair value gaps all the time. If I build fair value gaps with market structure and liquidity and order blocks, then the probability of our traders is very high. So one concept isn't enough. What is an order block? Guys, an order block is the final opposing candle before an impulsive move that breaks market structure. And let's talk about let's get into it right now. So I have a few of these laid out, and just to make it a little easier for the video, we're using our square tool today. And what I do is, this is basically the last strong aggressive opposing candle. I have I start the square at the top of the body, the bottom of the body. I've seen people do the top of the candle wicks to the bottom of the candle wicks. Listen, I've seen people just do just the body. If you're just doing it at all, that's good news. Okay, if you're pointing it out, you're on the right track. So I've had more success with just doing the bodies. You can do the wicks. That's perfectly fine. This is the hourly time frame. So this was the last opposing candle down, creating an order block, and then you get a final retest up here. And if you're doing pre-market analysis, guys, like you'll see in my videos on YouTube every morning, you can come in and say, okay, it's 8 o'clock, 9 o'clock a.m. If you look at the time, I'll show you where the time's at on these. I'm rolling 9 a.m. right under my mouse. You see that? And you see, okay, we had a 1 hour candle, and that created an order block that already got tested. So I can assume today we're probably going to head down, right? And that's exactly what that did. It actually dumped that day. That's a huge candle down. So it started here, and guys, that's almost 400. That's 500 points. That's a big day. 100 points on NQ is $2,000 for one contract. So times 5, that's $10,000. If you can call these out. And honestly, to be honest, guys, if you see this order block and then you saw this this candle rejection, you can put it in maybe a half size contract, 174. I mean, you could do 2 mini contracts and just kind of start the day out there. So you put your risk above here, and you would put your profit right here. And honestly, you could tell there's a nice fair value gap right there. So just think about that. You don't have to trade the 5-minute or 1-minute time frame all the time, guys. You can do these 1 hour time frames. You see how that works out perfect there. Also, I'll put order block in all caps, and you see that nice rejection. All right, let's go to a bullish, and just briefly, let's look at this bullish real quick, and I'll tell you what's going on. So body, square, right? You have a sweep of liquidity. Let's point out the sweep here. So sweep of liquidity. You have a V-shaped recovery, and you have a candle closure above. So that's causing a order block. And look at this. So this was on July 8th, July 9th, July 10th, July 11th. So 3 days later, you're entering this order block, and look how that plays out, guys. Creating an order block, coming down, rejection, back up. It's very cool to see once you start seeing order blocks and fair value gaps and liquidity sweeps. It's very cool to see like it play out on the charts. What's going on here is basically the institutions, okay, accumulate positions inside the candle before pushing price. So that's why price often comes back down. It's not just because it's magical, because it's unfinished business that exists here. The banks and the hedge funds, they have unfinished business that is right here that they need to go back down. And we know that money runs the world, so we know that they need to come back down and grab their money. Does that make sense? Hope it does. Let's do another bearish order block. So you have your body, and we'll point this out one more time. Body, come over. Sorry, I had to sneeze. Order block. I had to sneeze again. So, order block. Maybe I can spell it this time without having a stroke. And you get a order block, nice rejection, and then down through the Asia market and London market. Looks like a little bit of accumulation here too. A nice little wedge. These are things that you start seeing as you're trading, guys. And then you get a break in the morning, fair value gap, rejection. You even get another consolidation wedge gap. This is crazy. I don't know what day this was there. Another consolidation wedge gap. And then another break. Isn't that crazy, guys? And then order block. Wow. That was a lot to learn there. That's 7 years of just training your eyes and looking at these things and understanding it. So there's your bearish order block. Do we have any more? Oh, here's some 2 more bullish order blocks. So body, order block created right here. Come back down, and this is literally like, I don't think we've gone over IFEGs or anything. Or no, this is perfect. This is literally perfect for you can call these IFEGs and order blocks. So perfect for continuation to the upside that day. Another order block. You have almost a sweep right there. So guys, this is here's your sweep for this order block over here. Sweep, V shape, candle closure, and up to the upside. You got almost a sweep here. Lots of liquidity drawn and taken a little bit. V shape, head to the upside. Come back down, retest, head back up. It's that simple. You have these cases right here where price came, swept liquidity, and then you get a complete IFEG right here, hammer candle at the top, but no retracement. Let's see if you do get a retracement later on. Let's look. No, market gap up. You get it. I mean, it does consolidate a little bit right here, which is cool to see, but mostly this market gap up, that's a huge gap. New week opening gap. Market's just pushing. That's your bullish order block. Oh, sorry. So bullish order blocks right here. Price returns later, finds buyers, continues higher. Mentioned basically like it's mentioning like I don't buy the first touch blindly. You know, like you don't want to just buy these first touches too blindly. Sometimes you'll come down and get a second touch, a third touch right here, 1, 2, 3, and then it pushes up. But if you're trading the hourly, you know, you're swing trading, and you're already at 50%, right here, this dotted line, and you're like, okay, well, I'm only risking 54 points for the next high, which is right here. So if I'm risking 54 points for 500, I mean, it's a good day, guys. That's a really good day. Might switch to the hourly trading market. And then the bearish order blocks we just talked about. Let's go back to those real quick. Bearish order blocks. So this is basically your reversals. It's the last bullish candle. That's your bearish order block, and explains why institutions defend it. So what is a valid order block, and then what's a invalid order block? So valid would create displacement, break structure, leaves imbalances like FEGs, and causes liquidity sweeps. So here's your liquidity, causes a sweep, leaves imbalances, and then break structure. So we broke structure right here. Actually, we broke structure right here, and we also break it right here, if you can tell. What's invalid is basically small moves away, no big displacements, doesn't break structure, and gets traded completely through the order block. Every down candle before a rally is not an order block, guys. Every down candle before a rally is not an order block. To really give you more confluences is these liquidity sweeps. Sweep, V-shape, candle closure below or above, depending on your case. If you can have a checklist, you know, that's what I would be checking. Sweep, V-shape recovery, and then you have your candle closure above or below, depending on if you're doing bearish or bullish. That's exactly what you want to look for there. All right. Let me see, thinking if I missed anything. So just combining everything, guys. Liquidity, sweeping the liquidity, getting the order block, creating a fair value gap, maybe entering in off of that fair value gap, and target opposite liquidity. That's a good one. Targeting opposite liquidity. So if I'm up here and I create this order block, the sweep, the V shape, and I create this order block, I fine tune my entry. My target, guys, is right here. My take profits would be right here. I would be doing one TP. You'll hear this word a lot, TP1. And then TP2, guys, would be right here, TP2. This low over here. So sweep, V shape, candle closure, TP1, TP2. Very simple. Doesn't have to be too complicated. Biggest mistakes for you guys: marking every single candle, ignoring trend. We have talked about trend. The trend is your friend until it isn't. Everyone has a different saying. The friend is your trend until it bends. The friend is your trend until fuck the trend, basically, some people will say, and then they lose their trades. Another big mistake is no displacement. Trading against market structure, ignoring liquidity. So keep those mistakes in mind. A lot of the times I would write these things on the wall, on a paper, and tape it to the wall just to get a good look at it. I challenge you guys to you know, go to your trading view tonight and try to train your eyes again to start seeing these things and looking at these things on the charts. Blocks aren't magical zones where price just automatically reverses. They're just institutional footprints, okay? They're clues. When you combine those, though, with liquidity sweeps and fair value gaps, they become one of the highest tools in the ICT model. I appreciate you guys watching the video. Like, comment, subscribe, do whatever you want to do. But I'm here to make every one of you guys profitable.